Institution Mobile, quality e-learning experience on the go.
Non-trading organizations that are set up to provide services to their members without the sole aim of making profits. They are usually charity organizations or social clubs. The major objective of a non-profit making organization is to provide services. Basically, the final account of a non-profit making organization consists of 3 books. The first is the receipt and payments books. The second is the income and expenditure book. And the third is the balance sheet. First, receipt and payments account. As the name suggests, this is the summary of the cash book over a particular period of time. The first is items are treated the same way as they are treated in the cash book. Second, all receipts and payments are recorded. Amount owings or prepaid are not accounted for. Now, let's take care simple format of a receipt and payments book. On the debit side, we have balance brought forward. We have subscriptions, bar taken if the organization is a trading organization, and we have donations. On the credit side, we have bar expenses, we have rents, we have equipment bought, we have wages, we have postage, among others. The second book is the income and expenditure book. An income and expenditure account is prepared based on the same principle as the profit or loss account. Note the following: expenses are debited and income are credited. Capital items are excluded. Third, debit expenditure for the period. Then the last one, accruals or prepayments are excluded. What are the major differences between the receipt and payments book account and the income and expenditure account? First, in the receipts and payments account, only cash transactions are recorded, while in the income and expenditure account, there is adjustments for accruals and repayments. Second, the receipts and payments account includes capital items, while the income and expenditure account does not account for capital items like equipment bought. Third, balance represents cash in hand or bank overdraft in the case of receipt and payment account, while in the income and expenditure account, balance represents surplus or deficit. Let's take a simple format of the income and expenditure account. We have a T format: expenditure and income. On the expenditure side or the debit side, we have rents, wages, postages, depreciation, lighting, and any other expenses incurred during the period. On the income side, we have subscription, donations, rent received, among others. Let's consider some of the things under account for non-profit making organizations. The first is accumulated fund. This is the fund that corresponds to the capital of a sole trader. This is the excess of the assets over the liabilities of a non-profit making organizations. It takes the place of capital in many organizations, especially non-trading organizations. Second, we have subscription. Subscription is the periodic contribution of members to the account or society. It is usually paid monthly or quarterly, and it could be yearly. Now, under subscription, we have two types of subscription. It could be subscription in advance or subscription in arrears. What is subscription in advance? This is the sum of money paid for future years by the members. It is treated as current liabilities in the account of a non-profit making organization. The second is subscription in arrears. This is the money owed by members to the association or society. It is treated as current assets in the final account of a non-profit making organization. Beyond this, we also have another thing, which is the entrance fee. This is the money paid on application by members to obtain membership of an association or a club. The last on the list is donations. It can be referred to as gifts of money or goods from any member or outsider of the club.
Fusion Mobile, quality e-learning experience on the go.